Hello and welcome to MetaSwing. In this video we're going to look at MetaSwing's trend wave indicator. This is the indication system that will help you stay on the right side of the market and find efficient trades in just about any charting time frame. To begin with, let's show how to turn the trend wave on and off and to make settings changes. So you can see the trend wave is displayed down here in the bottom. There's two components to it, the trend and the trend strength indicator. To change the way that they look, simply right click, go to Edit, Color and Style for MetaSwing, and then scroll down till you get to trend wave. There's a master on-off checkbox for each component, and you can adjust colors and widths, etc. Just make sure those are on, and when you do that, you'll see the trend wave at the bottom of the screen. Let's begin our look at the trend wave with a daily chart of the S&P 500 ETF SPY. Here, again, at the bottom, this is your trend indication, green for bullish, red for bearish, and beneath it is a trend strength component. The general guideline for use is that the trend component is good for looking into the future for 10 to 20 bars. We use the trend strength component to examine the strength of that trend signal on the top or lack of strength. When the trend strength indicator has no signal, or you can just see the black background, it means weakness. When it has signal, such as the green bars here, it means strength. Typically, we look for this to help us with a 5 to 10 bar projection forward. If we're going to apply this right now to the SPY, I'll turn on tracking, and you can see here that we've got some weakness in an uptrend on the SPY. And sure enough, price does kind of pause as far as its general uptrend. It's still in an uptrend, but it's a little bit weaker. Strength comes back in and it continues up. Some catalyst generally pushes the market down faster than it pushes the market up, as we all know. So we get a trend indication that changes to bearish here. Bottoming action takes place, weakness, and we confirm another uptrend here as we go forward with strength. And then, as you can see here in April, we begin to lose strength. The indicator shows a little bit of weakness, although we're still technically in an uptrend. And sure enough, we do begin to get some stalling of price, so it was successful at somewhat forecasting that lack of trend strength and a possible end of that trend. And it does come to an end here rather dramatically. Let's pan forward, and we see that the downtrend continues, and here we go. We begin to see a little bit of weakness in this downtrend. I generally count weakness as about 3 to 5 bars in a row of weakness. I really kind of discard the 1 or 2 empty space sort of thing. But when it hits about 5 bars, I start to take it kind of seriously. And sure enough, from that point forward, the downtrend kind of pauses until it begins to show signs of an uptrend, but not strong, and reverts back to some bearish behavior. Panning forward, here in September of 2010, we begin to see signs of an uptrend. Price is beginning to enter the area above the SR4 and SR3 areas. That's generally confirmation of bullish trend behavior. And sure enough, we get trend strength, trend direction. Here we begin to get a little bit of weakness, and sure enough we get a little bit of retracement and pullback behavior in the SPY. However, it continues its trend on upward. Once again we get some weakness. I don't know, I'm questionable about that because the market did continue on up. It pulled back a little bit in here, but I don't think that it was due to any forecasting from this point. And down it goes. This is a daily time frame. We can apply this to just about any time frame. In a second we'll switch to a different one. Finishing this up, price generally trades in a range, as what happens quite frequently when we've got weakness all across. So I have neither bullish nor bearish behavior, and it's very sketchy going forward, and price continues to trade in a range for a little while. Let's look at another component and another time frame. Now let's take a look at a different market and a different time frame. This is a weekly chart of the US dollar Japanese yen. Begins in 1999 in a bearish trend. Weakness begins to show up in that trend with a lack of signal on the trend strength indicator. Then slowly switches to a bullish indication. Sure enough, price follows through and trades upward. By early 2002, we begin to get a little bit of weakness in the trend strength indicator on the uptrend, and sure enough, price begins to turn down and change to more of a bearish outlook. Price follows through, even though we get some weakness here in the beginning. This would be 2003. We get some sideways action, but price continues on its bearish trend. Here, the bearish trend continues, but really begins to show weakness by late 2004. And from that point forward, we trade in a sideways range until real strength begins to show right about this time in September of 2005. And panning forward, we can see some bullish activity, even though a very strong pullback here in May of 2006. Now let's look at a daily chart of the 5-year bond yields. Here in 2010, after coming off some choppy market action, we finally get a confirmed downtrend with price trading below the SR 5 and 6 level, and confirmed strength here in May of 2010 of the bearish trend. As we pan forward, we begin to get a little bit of weakness after about 5 bars here, and that tells us to be on guard. Okay, this trend may be reaching its end. One more push downward, and we begin to see trend weakness in the bearish trend along about November, and price then switches to where it trades above the SR 3 and 4 range with a confirmed bullish reading. That tells us that trend has changed and is likely now to be bullish. Going forward, once again, price trading in a bullish direction. We begin to see some weakness, and that puts us on our guard that trend may roll over on us. Indeed it does. Turn to a downtrend. We begin to get weakness here on around let's say July 11th, because we have about 4 to 5 bars here, and sure enough we do get some sideways trading range. But that's what develops. Then the trend continues. Another best practice for trading with the trend wave is to allow it to work for you in more than one time frame. Let me illustrate. Here we're looking at a chart of FedEx, and we're looking at a 65-minute chart. Okay, Here at the right edge of the chart we see a day-o trade signals, and we also see a well-defined strong intraday trend that's been going on for a few days. And again, this is a 65-minute chart. Well, one of the best ways to ensure that a trend has some validity and some strength is to check a trend measurement in what could be considered to be the next highest time frame. To check the next highest time frame, we'll switch to a 120-minute chart. And once again, on the right here, we see no trade signals, but we're not trading this time frame. We're just using the 120-minute chart to confirm the 65-minute trend. Down here in the trend wave, we can see that we have a solid trend reading with trend strength and trend direction being bullish. And it's been that way for over 2 days. So using this 120-minute time frame, we've been able to confirm the 65-minute trend. Now back on our 65-minute chart, we have a strong trend in place. We have trading signals. Let's see how it turns out. We're able to confirm our trend in the next highest level at the 120-minute chart, and we get a fairly favorable trade entry, and the trend does continue until we begin to see weakness on July 8th with trend turning down on us. You can use MetaSwing Trend Wave as a part of the full suite along with all of the other trading signals and methods, or you can use it to enhance your own existing trading methods. To illustrate this, we've set up a comparison and a test. Here at far left, you see the trend identified as a 50-period simple moving average. And we're going to test this by enabling a common signal. This is a relative strength index, and all we're doing is we're signaling when the RSI crosses above 45. That's a pretty common entry momentum signal for when a trend is in place. And in this case, price is above the 50-period moving average. But we have two other conditions too that we're also going to test and compare. This other condition here in red is when the MetaSwing trend wave is bullish. However, there's no strength shown for the short term. And in this case, and also once again, price is crossing above the RSI. In the center example, price crosses above the 45 RSI, and we have trend wave bullish and strength. So let's see how that turns out. To illustrate the performance of the trend wave, we've set up a test to measure it in isolation. Just as I showed on the chart, the test uses a 14-period RSI crossing above the 45 level as a primary trade signal. The other three conditions vary, the first being to measure trend by the close being greater than 50-period simple moving average, the second being trend wave without strength, and the third trend wave with strength. The results are that using a trend wave with strength generates a 36.3% increase in performance. This was a statistically valid test across a market-neutral time period. Here at right, you can see the sample equals population sizes, 11,598 down to 6,352 for the trend with strength. This illustrates that you can use trend wave with the rest of the MetaSwing suite, but you can also use it with your existing methods, and tests have shown that you're likely to see significant performance improvements. Thank you for your interest in MetaSwing and for watching this video. If you'd like to contact us at any time, please feel free to do so. Here's our contact information. Good luck and good trading.